Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we.
Disclaimer, not financial advice. The information provided on this channel is for informational and demonstration purposes only, and should not be considered as personalized financial, investment, or trading advice.
Welcome back, traders. I hope everyone had a great weekend. Today is Sunday, 27th of July. It's about 4:50 a.m. and I'm recording my thoughts and analysis was done over the weekend. Let's start with Dixie. Let's start on a monthly time frame since it's almost close to the end of the month. I think it's a good time to look at the monthly picture. On this monthly setup that I'm looking at, we seem to be holding the support that we started off from um, the trend line, the monthly trend line that we've had. And I'm thinking this monthly candle might give us a clue that we might be going up briefly for the next few weeks. If we close this month with this green candle, even if we should pull back a little bit below, kind of form an inverted hammer, that is still a good candle, reversal candle. Um, and I'm watching that mostly on the monthly. But let's not forget the trend is strongly down on the monthly chart. So anything that we trading in the reverse is one that you must have rules in place, stop loss in place. It may not necessarily pan out as we are looking at it. Let's look at the weekly on this same chart and see how the weekly is looking in our eyes. So on the weekly, we did spot a few divergences a few weeks ago, which has played itself out. Now I'm looking at this candle, this one here, this red candle here on the weekly. That is the bearish engulfing candle ruling the entire party. Okay, so this candle is ruling everything until we go above this candle, to be close somewhere above here. Um, let's also still have that cautious tone with our reversal analysis. Okay, so next to this candle ruling the major party is also this candle that has formed some divergence that pushed us down this week, which we have been able to rebound about maybe a third of the candle so far. So again, this candle ending on the weekly as a bearish candle, okay, regardless of the push up, it's still a bearish candle. We've still not been able to close above last week's candle. So again, it still has a bearish tone to it. So let's not forget these two higher time frame um, reminders. Now, whilst we're looking at the bearishness of the higher time frame based on this candle, okay, the fact that we are able to push off a fib support level, the golden support on the 4 hours chart. Before we look at the 4 hours, let's look at the day, then we are in order. Right, so if you look at the day, the daily chart is looking pretty good. All right, we formed our reversal candle here, and I'm looking at this head and shoulder pattern to play out eventually. Now we don't have a confirmation on this head and shoulder pattern until we close above the neckline. Okay, so any candle above here, or this blue dotted line that I have put here, would give me enough confidence that this head and shoulder pattern is going to play out. However, the fact that we have two good candles after we hit this support, okay, this is a fib level of the golden zone on the 4 hour setup, that we came to hit this support, and we have held this support. As long as this support is maintained, I'm still in favor of the reversal on the dollar. Um, if you're trading the dollar in any of the forex pairs, be it GBP USD, Euro USD, AUD USD, USD JPY, you want to pay attention to this area that I've put a box here. Okay, now let's step down to the 4 hours and you'd understand. That's where if you get any candle opening and closing below this block, okay, this block here is very important, anywhere between here, because at the moment, this candle that we formed here is a very strong bullish candle above the 20 period moving average, um, giving you a change. I call that changing gears. Okay, so I see the dollar is changing gears. We are able to hit the 50 period average on the 4 hours. And I think this was a rejection zone. I think this became a rejection zone because it also corresponds to the 200, I believe, SMA. I don't have SMA on my chart, but yeah, there was a hidden bear on this candle, and I'll show you the hidden bear. The hidden bear is originating from here. All right, so if you look here and you look at your RSI, look at your MACD, okay, we made this high, and look at where RSI was, and we have made the same high, okay, as a matter of fact, slightly higher high, but we closed at the lower level. This is a closing, so our closing was somewhere here. So the fact that we've closed lower than this high, but then our RSI is higher, that's a hidden bear, right? So this hidden bear pushed us down on the 4 hour setup. The bigger question is, has this hidden bear finished his job? And that's what we need to figure out. For now, I'm looking at momentum and I'm realizing, okay, momentum is dimming down, but it hasn't crossed the zero line yet. Okay, so there's still a level of caution on the dollar based on the fact that momentum is ticked down. So coming into this week, let me step down to the hourly chart and then we'll have our trade plan based on this hourly chart. Okay. So on the hourly, we had a small candle here, another one small here, but we have maintained this 20 period moving average on the hour. So the trade plan is as long as price stays above this 20 period moving average on the 1 hour, our thesis is that the head and shoulder pattern that we spotted on the higher time frame is valid. And yes, we do have an overhead here, which is the 200 period moving average, as I was saying initially. But this is the exponential moving average. It's still a resistance, it's still a cloud over our head. Once we are able to close above the 200 period average on this 1 hour, our thesis is golden. For now, we are between this 200 EMA and the 20 EMA, and it's kind of a no man's land at the moment. Okay, it's a no man's land, but based on the higher time frame pattern that I spotted, with risk management in place, I'm in favor that the dollar would push up coming into this week. Let's also remember that there are some important news on the dollar this week. We have the Federal Reserve meeting this week, and obviously, if they do hold interest rate as opposed to the idea of a cut, then I should think that should give the dollar some fundamental reason to hold these head and shoulder pattern that we are seeing. Um, I also currently don't see anything on my indicators suggesting that this 1 hour setup that we are basing our thesis on from the higher time frame to hold uh, may fail. Um, and if it does, I would just expect price to move somewhere to about 97, 128, like, somewhere around here. 97, 128 will probably be your stop loss. So let's put it somewhere around the 50 period on the 1 hour. It might be safer. Okay. You know, uh, we shouldn't have a candle open and close one below this 21 period average. But, if you want to take it with a a good risk management in place, then your stop loss should be somewhere right about here, 97, 120 is about where your stop loss should be. If a candle comes all the way to this area, we are in trouble in terms of the potential rebound. In terms of wave count, I see this as a wave one, two, three, and I'm probably going to call this a wave four because the last time I was expecting this wave four to happen, we didn't get it. Okay, so I think I took that off my chart, but yes, I was expecting this to be a wave one, a wave two, a wave three, and a wave three here. So we pulled back down to the 21, and I may count this as a wave four for a potential wave five, uh, which then would probably, if we're able to break the 250 period moving average on the 4 hour setup, so on the 4 hour setup, once we're able to break and close above this 50 period moving average, then we are golden. We are golden from there. So that's a brief analysis on the dollar for the week. Thesis wise, going, we're thinking we should continue going up, but we are not out of the woods yet until we break above our 50 period moving average. Target wise, for this coming week, I probably would put my target somewhere around this blue dotted line here, 97.743 would probably be a good target. And that's if you are able to clear this 200 period moving average on the 4 hour exponential target on the 4 hour. But for now, I'm more of a bull on the dollar in the coming week with a lot of risk management in place. And I hope this is quite informative so far. I think I've already expended my time on this. So thanks for the time. Thanks for paying attention. Have a great trading week. Cheers.